reasons is because you don't want to be working for the rest of your life, right? You don't want to have a job for the rest
Come
of
on
your
now.
life. And we've seen our parents work to 70 years old, 65 years old, and we're not about that life.
Yeah.
We are the generation
Don't
who
lie.
wants to retire early. We want fire, right? We want financial independence, retire
Mm-hmm.
early. And you're not going to save your
Come on now.
so you have to be investing. And the earlier you start investing, the earlier you're going to be able to retire early.
I'm trying to give me a bag. I'm trying to give me a bag. I'm trying to give me a bag. I'm trying to give me a
What's up? What's up? You are now listening to FYI FLI, the podcast, and I'm your host, Hassan Thomas, along with Remy, and we are here to share tools on how millennials can budget, save, invest, and understand student debt and credit to achieve financial freedom. If you're a high school student, college student, or someone who's interested in gaining more financial insight, this podcast is for you.
I'm trying to give me a bag. I'm trying to give me a bag. I'm trying to give me a bag. I'm trying to.
What's up, my FYI Fly folks out there? How y'all doing? I hope y'all doing all right. Welcome to the FYI Fly podcast. My name is Hassan Thomas, aka the kid that did and the man that can, baby. And today, we're going to be chopping up with financial coach and wealth strategist, Miss Tadana of the legendary WealthBuilders. How you doing?
I'm doing excellent. How are you doing?
I'm doing great. Super happy to be here with you. And we really going to touch and impact a lot of people today. So it's up.
Yes, I'm excited for it. Thank you for having me.
For sure. Because really, I like to say here at FYI Fly, we mainly like to skip the fluff and get right into the good stuff. So we wanted to bring you on the show and really learn some game about investing in the stock market and really why we should be investing early as possible and as often as possible. So can you tell us, what got you investing and what was your first stock that you invested in? Give us some of that foundational game that you had.
Sure. I actually started investing when I got my first job. So my first job straight out of college.
Okay.
I was working in investment banking. So I learned about investing straight out of college, and I was investing long-term buy and hold with my 401k. So I was maxing out my 401k. But when I really started actively investing, buying my own stocks, buying my own ETFs, was in 2018. And I started out with ETFs like the FYI, which is the ETF that tracks the S&P 500.
Love me some ETFs.
Starting out with the DIA, the ETF that tracks the Dow Jones, and let's not forget the triple Qs, the ETF that tracks the NASDAQ. So those were the first ETFs that I got into. So now the portfolio has grown much since then.
I love it. Let's touch on them ETFs for a little bit because those are my favorite investments. I always tell people with VTI, you can literally own every company in the US, and then with the other ETF VXUS, you can literally own every publicly traded company outside of the world. So touch on how beneficial those ETF investing is.
Okay. So for a lot of people, they're always asking, well, what's the best company to get into, right? Everyone always want to pick the best company. So the great thing about ETFs is you don't have to pick. You can have all of the companies. So it's really great for those investors who don't want to do the research for individual stocks, and you can just trade the entire market. So you can trade the entire S&P 500, the entire global markets, the entire NASDAQ. Okay. So it's just really easy. And you get some of the benefits. Like a lot of these ETF, you also get dividends. So you're getting dividends and you are being able to trade the entire market. So it's really good for those long-term investors, buy and hold investment.
100%. Y'all take these notes today. Because I harp on ETFs and REITs. I love REITs because in my eyes, it's literally the same, but a group of real estate properties, a group of real estate investments. So I think it really provides a diversification that you were talking about, and then it's easy. We don't want to do a lot of hard work. You know what I mean? We don't want to do too much. So I think that's why that may be another reason why I started with it and why I tell a lot of other people to start with it because it's easy. You know what I mean? For sure. So, dive a little bit deeper into why young folks and really anybody really needs to be investing as early as often.
Well, one of the main reasons is because you don't want to be working for the rest of your life, right? You don't want to have a job for the rest
Come
of
on
your
now.
life. And we've seen our parents work to 70 years old, 65 years old, and we're not about that life.
Yeah.
We are the generation
Don't
who
lie.
wants to retire early. We want fire, right? We want financial independence retire early. And you're not going to save your
Come on now.
So you have to be investing. And the earlier you start investing, the earlier you're going to be able to retire early. So that's why it's just so important. The earlier you start, the better off you're going to be.
And you know what's crazy? Like coming up, you would hear like, save your money, save your money, save your money. And you feel like, you know, without that financial knowledge that we have now or that we're gaining now, you feel that saving was like the pinnacle. You know what I'm saying? Like you felt that saving was like the top of the top. But now as we're getting older, we're getting wiser, we're getting smarter. Like you said, we need to have our money working for us. We need to have our money appreciated and rising in value because you said, I love what you said, you can't save your way to retirement.
You cannot.
That's facts.
You cannot. So to your point, we definitely have to have our money working for us. We can't just be working hard for the money. Our money has to be working hard for us as well.
100%. Especially, let's touch a little bit on inflation and like, and that's really another reason why, you know, we need to be investing so we can beat inflation. So like, how does inflation play into like some of your investing strategies now?
So for one, inflation is at an all-time high that has been for like the past 30 years. We're at a 9% inflation, right? Which means the cost of living is up 9%. So when we look at a traditional savings account that's giving us maybe 1%, you're losing money.
Maybe.
But you don't feel like you're losing money because you don't see your dollar amount decreasing, but you are losing money. So you need to have your money in things like stocks or investments or other financial instruments that's going to give you a 15%, 20%, 30%. Because if you're not getting at least 9%, you are losing money. So that's also why it's so important to be investing, especially because of inflation. So you're not losing your money, your hard-earned money.
100%, 100%. And all these questions just keep popping in my head. What's your thoughts on crypto? What's your thoughts on that?
So I do have some crypto, and it's more so like a long-term.
Okay, so it's in the portfolio? Okay.
Yes. It's for the long-term game. I'm not trading crypto, but it's for the long term because I think that we are getting into this digital era. We're getting into the metaverse. And at some point in time, everything is probably going to be a digital currency. No one's probably going to actually be exchanging money, right? We're starting with our Apple Pay, our iPhone. A lot of people aren't even taking cash or carrying cash. So at some point in time, I think we will be completely over to digital currency. So I do think it's a good future investment.
I love how you said that because what I was thinking this earlier today, like it doesn't matter what one individual or, you know, two or three individuals or even you and your family think about Bitcoin or another cryptocurrency. If entire governments and entire, you know, big major organizations are backing it, who's going to stop it? You know what I'm saying? If these industries are becoming billion-dollar industries and now they're becoming federally regulated, like they got Bitcoin and some ETFs I saw, what was that, like last year that they, you know, approved that or maybe earlier this year. So once you start seeing these big government organizations that have the power partner up with businesses and businesses are starting to back it, who's going to stop it? Us? You know what I'm saying? So that's why I'm so happy that, you know, we are more open-minded because, you know, things are moving. So I'm glad that you gave that answer. But like, let's pivot back to the investing for now, investing in like to the stock market. Like, can you tell, you know, for the people who often feel like, you know, they can just put some money here and there and not be consistent with their investments, you know, sometimes they feel like they can just drop it in there and they become millionaires overnight. You know what I'm saying? So can you tell, like, bring us back to real life. Bring us back to reality. Like, how does that work?
So you can't treat investing like gambling, right? So there is a saying in the investment market that bears make money, bulls make money, and pigs get slaughtered. So I'm sure you heard the bulls and the pigs, right? So that just talks about whether you think the market is up or down. But if you're a pig, meaning you're just greedy, you think you're going to throw 100 in there and get 100,000 out, you're going to get slaughtered because you don't know what you're doing. And you're thinking, like, this is Atlantic City or a casino, and that's not.
Come on now.
So it's like, you can't treat this like it's a casino, because that's not how it works. You're going to get slaughtered in the money. It's still risky to investing. So you still need to be, strategic and know what you're doing.
So, because I know you're a financial and wealth coach. So, like, for all the people that you helped throughout your journey, what has been some of the biggest mistakes that you've seen when it comes to investing?
One of the biggest, especially because I teach trading as well, is people not having a strategy at all. People are just buying stocks. They don't know why they bought stocks. Somebody told them this is a good stock. Someone told them this stock is going to the moon. So they bought their stock, and they do absolutely no research whatsoever. And if you have no idea why you bought into a particular investment, then you probably shouldn't be buying into it again. Especially if it's not an investment that's like a tried and true ETF, then don't just buy it just because somebody told you it's going to the moon.
Yeah, for sure. And like, for those people who don't do their research, I really feel like it comes from like the lack of, like, when we were in school, studying, that word study kind of was like a negative word. You know what I'm saying? But like, in the real world, you don't have to study your competition. You don't have to study the stocks and the things that you're about to invest your money and your time to, because if you don't, you gonna take a L.
Yes, you're right.
That's honestly how I feel. So definitely, for everybody listening, make sure to do DIY, do your own research, or whatever they be saying. Make sure you do your own research. So, like, can you explain the difference between investing and trading?
Yo, are you ready to hit your next level? Do you want to increase your drive, destiny, and dollars? Well, if so, check out my new book, From College to COVID, 24 Lessons Learned During the Lockdown, where I've compiled 5 of the biggest lessons I learned going from college to COVID to starting my financial literacy empire, FYI FLI, plus 19 lessons from your favorite entrepreneurs, entertainers, and athletes that have been featured on our show. There's literally something for everyone. So purchase your copy today at FYIFly.com/From College to COVID. Let's go.
So investing is typically a long-term strategy when you buy gold. So a lot of times people think of investing as for their retirement. So it's like their 401ks, their IRAs, they don't plan on touching those stocks again until they're like retirement age. But whereas trading is more short-term. So a lot of people are trading for active income. They're looking to add income into their account right now, take money out of their account right now, or accelerate that growth. And the point of it is, when you look at long-term investing, people are like, don't time the market, don't look at the market, just wait it out. Whereas with active investing, we do time the market, right? I call it like, investing is like marriage and trading is like dating. So I'm like, with marriage, you just stay in there, right?
Okay.
The up and downs, the good and bads, you work it out. But with trading, it's like dating. We're not in here for a long time. We're in here for a good time. So we are only we are only looking to take advantage of the upside of the market, get that profit, and get out.
Man, that does sound like dating. Let me get the upside, what you got to offer, then I'm done. On to the next. Come on now. That does sound like that. That's crazy. So when I think about trading, I feel like trading is a skill that needs to be learned. And that has to be learned, you know what I mean, before you start jumping in there and losing all your money. You know what I'm saying? So I feel like trading really needs to be learned, or is a skill, whereas investing is knowledge. You know, and as we talked about with those ETFs, it's only a little bit of research you got to do with those. You know what I mean? So how long did it actually take you to start, or to actually become profitable with trading?
So when I first started trading, I did the research, right? The studying that you're saying that we don't like to do. So I did study, I did the research. I also went to some courses, some master classes with some proficient traders. So I was good at trading. So for me, it took me a few months to actually get good at it. And now I know how to do the research. I have the skill. I know the strategies. I created my own strategies. But I teach a course where I teach people how to go from, a novice investor to a confident trader in 6 weeks. So you can do it. I just condensed
6
all
weeks.
the information that
Okay.
I've learned into like a 6-week program.
Yeah. So like, how did that going to, other masterminds and other workshops, how much do you think that helped you compared to like if you didn't do that and just tried to learn by yourself?
I think it really helps the learning curve. Like when you pretty much see people that have achieved what you're trying to achieve, it kind of helps you with your learning curve because you don't have to make all the same mistakes to get there. You get there a lot faster. So I think it did help me. And it really allowed me to see that I could make some good money trading. And it doesn't take the whole day. You don't have to have 10 screens up looking at the stock market all day long. It does not have to be that complicated.
I was just about to ask you that because that's the conception, that's the perception of trading. You at your screen all day looking like, Dexter's Laboratory, go crazy. So like, can you elaborate on like the actual commitment that it takes? Like give us a average trading day for you. What does that look like?
So typically, there's also different types of traders, right? There's day trading, which I think most people think trading is. And day traders are in and out of trades within few minutes, right? It's all within the same day. But there are swing traders, and those are people who are in trades from days to weeks to months, which is what I do. So I could book maybe 3 trades on Monday, and I may not have to trade again for the rest of the week. I just spend an hour on Monday getting into some trades, and I can make $1,000 for the week just for an hour worth of work. Because I know when to get in and I know when to get out, and I don't really have to look at it again. You could put in your different orders and it will sell it for you automatically. So I don't have to be on a computer screen. I could glance my phone just to see how it's doing, but I don't have to be on the screen all day long. Nobody has time for that.
Nah, facts. So I'm digging this trading topic right here. So like, what's the biggest flip that you've done? Like the least amount of money that you put into a trade and like the biggest flip that you've gotten?
So I've turned a $1,000 account into a $15,000 account in like 3 months.
Of what
I have a student that did better than me. He turned like a $10,000 account into a $50,000 account. So he didn't even faster than me. He's my student. Like,
that's how you know you're a great teacher.
But it's like, I like that. I'm like, it's kind
For
of like
sure.
Karate Kid, right? It's like sometimes that the student becomes better than the teacher. So it's like, it's possible. But the thing is, it's possible. So it's just, a lot of people, they want to just come and do it without any education, right? They want to say, can I put $1,000 in and take $100,000 out? But it takes time. And sometimes it takes more time to do that. You might have to get into more trades. You might have to look at it longer. So it definitely just depends on your commitment.
So what do you think what do you think the key factor to that, ginormous flip from 1K to 15 or from 10 to 50, like how can we replicate that?
To be honest with you, a lot of it had to do with a lot of the big gains during the pandemic. So there was a lot of stocks that were jumping up. And if you were catching those jumps, it was like, oh my goodness, right? So there were stocks that was like Zoom, Apple. There were certain stocks that if you caught those big jumps, you would just ride that wave and then you would sell it, right? It's like, because it doesn't always stay high. It comes back down, but you have to know when to sell it.
For sure.
So if you are hopping into companies that you have a good idea is going to spike up, then you buy a lot of shares of those companies or you trade options on those companies, you could easily get like $3,000 on a trade in a couple of days. And you're like, okay, I'm going to take that $3,000. I'm going to put that on here. And then it's just the ROI just keeps going and keep going, but that you could just grow your account really fast. But you can't get too cocky with it, right? Because that market will humble you sometimes. That market will humble you. And it has happened to me. It would be like, okay, even like
give us a story about some greed.
Facebook. I was thinking Facebook was going to go up to the moon. I put a lot of money down on Facebook. Their earnings call came in, and the shares just dropped like $20 in a day. And I was just like, oh my gosh, Facebook. what just happened here? So there are times that a stock price can just jump, and you could just lose like $5,000 overnight just because of an announcement that happened. And you're like, wait a minute, wait a minute.
Thanks. Look, where the money going? Where the money going?
So it could happen.
So like, go ahead.
So you definitely have to kind of have that like emotional intelligence, because you can't get so wrapped up about it, because it happens. Like, you're going to get gains, you're going to get losses, and you can't get so attached to it. And some people are, because it's your money, right? You're attached to it. You don't want to see
100%.
You don't want to see it dropping, but you have to know that you could gain it again, right? Just get on another company. Don't take it personal. The market doesn't care about your feelings. Don't take it personal. Just get into another winning company.
So, whenever you're doing those trades, what do you think that big reason for the Facebook, because I'm sure you were doing your research, what do you think happened? Like, where do you think the mistake went?
So a lot of times we're looking at past performance, because we don't always know what a company is going to announce. We can kind of predict, but if Facebook, their past earnings, they've been beating their numbers. They've been beating their sales goal. Their revenue is increasing. Their profit is increasing. They're having new initiatives and launching new things. You can just pretty much make the educated guess, when they make their next announcement, that stock is going to jump, because that's what it's been doing. But sometimes they don't make their numbers. They start losing a lot of subscribers, which was happening. They weren't getting as many subscriptions, and certain things were dropping. And then all of a sudden, shareholders start pulling out, investment banks starts pulling out, and the share prices just start dropping immediately. You can't catch it. It just happens like right away. So it's like sometimes that happens, just like Target, just like Walmart, right? They were having a lot of inventory issues. They weren't making their sales goals. They had a lot of markdowns. Netflix, right? They were losing so many subscribers. They weren't hitting their numbers. And just overnight, a price could drop like $50. And if you're in it, there's nothing you can do. So that's the risk that you do take when you're investing. You can't really protect 100% from a loss. It's going to happen, right? It's going to happen.
So to mitigate that risk, to, actually acknowledge that risk, what percentage should we be trading? Because for my folks that only have $5,000, don't you go in there putting $5,000 to trade? So, like, is there a certain percentage of money that you trade with, or like, how does that work, or what advice can you give us?
So I typically have two accounts, right? I have my long-term account that's just buy and hold, and then I have a whole nother account that's for trading. And so my trading account, all of it I'm trading, but I usually put 10% to one particular company. So I'm not going to put 50% of my account into one stock. So I'm risking 10% of my company, 10% of my portfolio at a time. And that's going to manage my risk to a certain degree. So even if the stock really dropped, it's only 10% of my portfolio that took a hit.
Okay, that helps. That helps, because I know some folks hearing that when they heard that 5,000, they was like, "Ooh, 5,000 in one day." So that really helps. It helps. And
it hurts. It does hurt, but like I said, you can't get so emotional about it. It's just kind of part of it sometimes. But you have to be able to manage your risk, not put your whole everything into one particular company. Don't do it.
For sure. So let's go ahead and pivot to a little bit some financial literacy, some fin lit, because this is FYI FLI, a show about financial literacy, which is not only understanding how to budget your money, but being able to grow and save your money effectively and efficiently. So our listeners want to know, give us some good money habits that you do, and then if you have any bad money habits, let us know so we can go ahead and cut them off.
So a money habit that I've literally had since a child is pay myself first. I've done it since I was in allowance as a little kid, and I still do it. Whenever I get paid, a part of that is
the richest woman in Babylon, right?
Exactly. A part of that is going to savings and investing off the top. Off the top is going to savings and investing. Because if you try to save and invest with money that's left over, you're never going to have money that's left over. You're always going to spend it. So you have to save and invest with what's left. So you have to spend what's left after you save and invest. So you have to take it off the top. So that's my good money habit. But a bad money habit, I think I kind of have like two that jumps to the top of my head. So I eat out entirely too much. I know I need to be cooking more often. But I sometimes, and I will DoorDash, I will Seamless, I will Uber Eats, and I'm like, man, you're spending $50 for something that you could have made. You're spending $50 for something that would have cost $20 had you walked in there. So that is a bad money habit that I think I really picked up during the pandemic, possibly. So yeah, I need to.
A lot of people.
I need to cut that bad money habit out. Also, kind of retail therapy. I do have those moments where I want to cheer myself up, and then I start.
Stop it off the emotions.
I'm like, I gotta stop this. But so yeah, those are my money habits. The first step is admitting that there's a problem.
Come on now.
So I am working on it. I am working on that.
So let's touch on. First of all, I want to say about that. Paying yourself first. Huge. And I believe in that 100% because just like you were saying, when you make saving and investing mandatory off top, now you're actually prioritizing it. So everything after, and that's why I feel so much more comfortable with putting my bills and savings and investing up first. And then everything else is spendable income. And I'm cool with spending all that or splurging that because I got my bills, I got my saving, and I got my future investing, my long-term investing. Mm-hmm. So I'm good. You know what I mean? So I just love how, you kind of like switch the order because a lot of our orders are we get paid and then we go turn up, we go buy this, we go buy that, we go buy that. And then we look what's left over. Oh man, I ain't got enough money to pay the bills. Oh man, I ain't got enough money to save or invest. So 100%. And then I want to get your thoughts on, because that retail therapy, everybody got problems with eating out, but that retail therapy, how can you help people as far as because emotions play, hugely into money. So can you kind of how can you help people with that retail therapy?
So for me, how I've been trying to work on my retail therapy is to do other things that I don't have to spend money on. So a lot of times I started taking walks. I took up skating, bought me a pair of skates. I was skating in the neighborhood because a lot of times it's the emotion, right? Yeah. It's like it makes you feel good to go shopping. So replace that emotion with something else that makes you feel good where you don't have to spend your money. So I started doing more natural things that's also good for me. It's good for my mental health when I'm skating, right? I'm feeling good. I'm feeling fit. So I try to replace it with some other things other than let me get on Amazon and start looking for stuff. Let me go to the mall. So I'm like,
come on now. I love it. So I got one more question for you. I'm going to read you two quotes, and I need you to tell us which quote is more accurate in your opinion. You ready?
Yes.
All right, bet. So the first quote is, more money, more problems, like Biggie. And the second quote is, money can't buy happiness. Which one do you believe is more accurate?
To be honest, I kind of disagree with both of them, right? Because
talk to us.
I think more money doesn't necessarily mean more problems. I think the lack of money leads to more problems than more money does.
Come on now. We know about that.
And even though I do agree that money cannot buy you happiness, I do think having money can buy you a lot of things that can make you happy. So it's just having the option to go travel, right? I love to travel. Traveling makes me happy. I love to eat, right? Eating makes me happy. So I can't do it as frequently as I want to if I didn't have money. So granted, the money itself isn't buying me happiness, but it's giving me experiences that make me happy. It's giving me a peace of mind that makes me happy. So I kind of disagree with both of them a little bit.
I disagree and agree with you as well, because that money is literally a tool. We're using that tool to go travel. We're using that tool to eat out. occasionally. You know what I'm saying? We're using that tool to protect our family. We're using that tool to move to, nice house in your location. So I think that's great. And I really appreciate you jumping and joining on the FYI FLI podcast. You dropped so many gems today. Killed it with the investing and the trading tips and advice. So give us, where we can find you, where we can reach you, and if you got any final words, go ahead.
Yes. You can find me at Legendary Wealth Builders. That's my business name. I'm on Facebook. I'm on Instagram. If you're interested in learning how to trade, learning how to make that passive income in the stock market, I do teach a 6-week course, which is called Trade to Profit. And definitely hit me up. You can hit me up, ask me questions, slide in the DMs. So don't forget to follow me and like on my social media platforms.
Come on now. You ain't mentioned TikTok. You ain't on TikTok.
I'm not on TikTok. I can't be keeping up with all those. I'm trying to keep up with these reels.
I feel. Nah, facts though. Say them reels the only thing that matter on IG now.
Yes, it's hard to keep up with all this content videos, but I'm gonna do it.
I know. It is hard, but as we know nowadays, it's mandatory.
Yes.
You know what I mean? So really, really do appreciate you and thank you. And for everybody listening, you know what we like to say: make sure that y'all not only learning, but y'all applying this information, and pick out those nuggets, pick out those gems that you caught today and apply them directly into your life. Because if you just learning and not applying nothing, what did you learn it for? You know what I'm saying? So I make sure that y'all are actually applying this information. And I'm going to need y'all to stay safe, stay invested, and stay FYI FLI. We'll see y'all next week.
See you next time. Bye.
Thank you all for listening to FYI FLI, the podcast, and we hope you enjoyed the show. Tune in next week for more financial literacy insights with our special guests. Please visit our website, social media platforms, and subscribe to our YouTube channel at FYI FLI Podcast. That's FYI FLI Podcast. See y'all next week and stay fly.